Good morning, afternoon, and evening to you all, wherever you are joining me at this moment. Welcome to 142 edition Investdata Academy Live with Ambrose. I said, welcome to another Thursday trading day. I will tell you that the aftermath of what happened yesterday with rate hike, the global stock market are still are still missed at this moment. And that's to tell you that this hour going forward, you will use your your stop loss as more important than even your entering a decision. That means if before you take any decision now, you need to put your protective stop loss in your work in your trade in anything so that you can trade your plan very well. If you have your stop loss, then you cannot think of what position to buy, because once you are putting your stock to pick first and you're not considering your stop loss, I think you are making a big mistake. Now that you must put your stop loss before take your entry decision, because it's very, very important. That stop loss will help you to manage your portfolio, especially now that we have seen another no heat in the market again. Why I'm hit that no rate has been hiked again, have been confirmed. That's why I say stock market across the globe no remain mixed at this hour, as players kind of interpret the outcome of Fed meeting with the rate hike by 775 basic points, which also will increase what volatility in the market. And you know what the meaning of volatility market increase means? It means that risk also in the market also it will increase. Also, as risk will also increase in the market, opportunities also will increasing in the market. That means for you to really understand how to play this market now, you must know how to use your chart very, very well, no matter the market you are playing. If you are playing any of the other, cryptocurrency, you are doing FX, you are doing a commodity, you are doing a stock, you are doing option, if you are doing future, whatever you want to do now in this market, you must look at your chart. But chart will direct you to know what to do. And that is why I said, looking at chart, you must put your stop loss to know exactly what to guide you, because that is the only way to go now. As players around the globe, in different in different climates of the globe, are also interpreting, the outcome of what of this decision of Fed. And don't forget that, as I said yesterday, Fed is not the anchor word global interest rate. What we see now, you can see that dollar becomes stronger compared to other pairs of currency. It tells you what that impact of that also on the economy of this other nation. That's why all eyes are on Fed yesterday. But now that we have seen Fed increasing rates, also I said yesterday that we also have about two or three other nations or countries that also will be meeting today to also increase, or either to increase or also leave it on change as I yesterday. But seeing Fed hacking the rate yesterday, I see that those other, especially Bank of England and the Swiss National Bank, are likely also to do the same thing, just also to in the name of fighting or this so-called inflation. Knowing that inflation, I've said yesterday, is not just cash push or liquidity push inflation that was seen as usual. In 1980s, or that when you see when there's too much money in circulation, you come to interest rate as policy tightening to control the flow of funds. But now this is not as a result of excess liquidity in the system all over the world, but as a result of what distortion was in supply. That means, for me, as World Bank is warning all the central banks that you need to rethink, because going the way of hiking will not do the economy globally, good thing. But I believe that in any environment you are in, within any environment, uncertainties or not, there's always opportunity in the market. There is risk, there's opportunity, there is good, there is bear. You need to understand how to play in all these cycles so that you know when to stay above the market, so that at the end of the day you'll be smart to the bank, no matter the cycle where we are and what is happening in the economy, because you have what information and you understand how to play the market. That is what we need now, because as rates have been hiked now, you can see that of course circular flow of funds. It is easy to know that funds will start leaving one sector to the other, one financial market to the other, one instrument to the other. But you saw what happened yesterday, that immediately was the market that was in green in the US, the interest rate changed immediately to red. You can see after that rally highs last day, it pulled back. It tells you that this volatility will continue. But also the rate will tell you that funds are going to flow toward that, because it's movement of fund, and this fund is what you and I trade. I said yesterday, both government and what in the private sector, individual traders will be affected with rate hike. Now that it has come, it's for you to now to follow your strategy, and also play your plan and trade your plan, so that at the end of the day you'll be ahead. Next is what is necessary now. We have seen the decision of Fed. What is the next thing for you to do as a trader or investor. And this is the time for you also to look at your strategy. Is it that yes, you want to start following your trend? Is it the moment that you want to look at? This is time you want to look at. Sit down and know exactly what to do. But this is the very time. The use of stop loss, as I said earlier, and also chart is very, very important. You need to chart to know where to head to from it, because if you are leaving chart alone, or you are spending with just feeling or with just sentiment, without looking at chart to read that what is sentiment, or you are using news alone, I think you get your foot off. At the key level now, you want to look at what is the momentum between what the Fed decision now and going to the future. Because I tell you, this one is the second to the last. That means between now and the next Fed decision or MPC meeting here, but down here in Nigeria, we should know that what the market, how the market behave. If another rate hike, which sectors are going to benefit from it? Which industry is going to be hit again with further increase in cost of fund? We want to look at it before we quickly jump into any position, because no matter, I've said earlier, uncertainty surrounding the market, surrounding anywhere, it is always significant opportunity for you to invest right. And when you invest right, both in the bull and bear market, I will tell you it is important to always have a clear word, a clear information and real information, and understand the market dynamics. That will help you to only trade your plan. But if you don't have plan, it becomes a problem, because most traders across the globe, they are quick in taking decision without looking at their chart, because they want to trade what is the market driving news, what is the news driving the market. No, you need to go back, instead of looking at the drive, look at the chart that also represents the emotion and also the attitude, the perception of those people in the market, because market has participants. If there's any information, there's well individuals in the market, not like when you throw kind of meat into them of lion, you can see how they want to react. When there's information that coming to the market, the traders in the market want to give them interpretation. That is what you focus. That's why you need to understand how to read your chart to see what the price action is doing. Once you have that at the back of mind, no matter what Fed is doing now, you need to understand what the behavior of the people from today. That's why I said between now and the last, the MPC or the last Fed decision, you need to understand the market mood and how we go to trade from now. That's why you need to use your chart very well, so that at the end of the day, you also invest wisely. Don't play with fire when investing or trading without chart. I think when I say don't play with fire, because if you are investing without chart, you are playing with fire, and this fire is what also destroy your world purposeful. That means if you really want your product to be preserved, you must understand how to use your price action momentum at all time to help you catch really strong trend, and not just a trend, really strong trend that you can see. Because this time you need to understand what is the attitude of people in the market. But and also at the same time for you to exit position in order to protect your hard-earned money. If you understand chart, will tell you exactly these are what we'll also be discussing in the coming master class. And I look forward to see many of you, those that have registered and paid. I appreciate you. I appreciate to say well done, and you'll be disappointed at the end of the month. For those that are here to also to make their payment, this is time for you to take that decision, because I believe that this volatility in the market, yes, as it provides kind of high risk, also it provides high opportunity to invest wisely. And that is why in this volatile market, you must be cautious, smart, and also you must live to trade another day and another season. And now we're entering another season already, because we're all seeing what has happened in the first quarter, third quarter. We're entering the last season of the year. For that last quarter of the year, there's also seasonality that comes with the last quarter of the year. You need to prepare yourself and also know exactly what to do. And that is what the class is coming up for every one of us, to be prepared and also take advantage of what is happening globally. Yes, as we speak now, U.S. Market indices are mixed, as Dow Jones is slightly up, while S&P 500 and the Nasdaq are in red as we speak. But if you look the world of the European markets, I'll tell you that they are sharply down this morning, as also reacting to the outcome of Fed decision yesterday, and also they are afraid also that the two countries within that zone too, like Bank of England and the Switzerland National Bank, also follow the trend. The trend of the Fed. And I told you earlier that Fed is what that anchor the global world, or kind of give a signal for the global interest rate. That is why the market there is down sharply this morning. And don't forget also, in the midst of all this, the geopolitical tension that is increasing in that zone as a result of Ukraine and the Russia war. As Russia started kind of arresting those people that are protesting against mobilizing for more force to fight Ukraine. You can see that these are the factors that are also pulling that market down. As we speak, all markets in that zone are in red. But Asia and Africa also are missed as of speak now. In the morning we saw down here NTS opening in green. At this hour, it's also slightly red again. I can see that for almost the beginning of this week, we have seen NTS trying to no slide, but the chart formation or the candle formation shows that there's a sign of reversal. But I said earlier to my people on my platform that seeing that rebound will be after what, after the MPC that's coming next week, and that's why since we're already seeing sign of reversal in the market, that's why I say reversal on that way. Let's see what the outcome will be. But if you look at what has happened, with Fed decision, I believe that also the access World Bank is also warning that most of the central bank of different climates also start rethinking. For Nigeria here, let's see how our FPC meeting will go as we speak now. I believe that if there's anything we will mark up either between 25 basic points or 50 mass, or if anything to 15, that would be very, very start for the economy, because the economy, even we saw kind of recovery in GDP. I will tell you, most economic data we are seeing now on market, they are all negative as we speak. We saw a decline in what in the August purchasing manager index. We also saw that the inflation has rallied to 17 years high, and we know that it is not because there's liquidity in the system that is pushing this inflation. That means there's no other things that the CBN and the federal government, the fiscal authority should do to address the issue of cost. Cost is what's pushing what we are seeing, distortion in supply, and all this is what we address. Not only looking at the way of what the way of interest, and not only that because we want to copy what the Western world are doing. You can always look at what is peculiar to your mind, what is happening, and also take decision in that direction. But as we speak now, oil price also reacted negatively immediately yesterday, pulled back again, but a lot of Fed announcing a rate hike, after yesterday. But this morning we're seeing that trying to stabilize around the at a trade 90.7 dollar per barrel, which is good. Also, like I said, that how before the end of the year we'll expect to see oil kind of rebounding to above $100. If that is that is sustained, that will also be nice. And that's why if you are not investing in oil or energy related company now, you need to have everything, because at the end of the year we're going to see more of a stronger number from that industry because of what they have done for the financial year. Because as a third quarter now anymore, we're seeing that oil price has remained pretty stable, and that has also supported their bottom line. That will also guide you when you're taking your investment decision. Yesterday, the last day, we're looking at the class of stocks that were started already on Monday. Today, we're looking at the blue chip stocks and penny stock. For me, what we to the chart life, I want to look at one. Because today is the last day we're looking at. We have discussed others, penny, we have discussed the high cap and low cap, medium cap and all those stuff. We have discussed the income stock and defensive income. We have also those stocks that are cyclical. We have done all those that, but today we're looking at the final one today: blue chip stocks and penny stock. These are the what we also considering today. When I say blue chip stock, it's a category of stock that is judged by what, by their perception, and at the same time their stability, the perception of quality in this company. Not only that, they are also called a blue chip company because they are stable in terms of in terms of the transaction, in terms of their business model. You see that they are stable, and this is what people look at when they are making investment decisions. And that stability is what they want, and that also that this company has a kind of a reputation. And not only that, in industry where they operate, they are most leaders in that industry, and that's where they attack what blue chip. And not only that, they are consistent in dividend payment, and also not only that their share is they have a large shares or they have smaller shares, but because they are consistent in dividend payment, and at the same time their business model is clear, and they are also age of this company is also very, very important. That's what they are called blue chip companies. That yes, they are differentiating themselves from others in the market, and they have a gain a lot of reputation, as I've said earlier, and this is what also support this class of stocks. But they typically also represent where you have a absolute highest return, absolute highest return in terms of your investment objective. If those that are looking for dividend paying stock, this company also give you good return, but not absolutely that they are the best in the market. They might not be, like I just said, typically might not be absolutely in terms of higher returns, but because of stability we are seeing, that's why also we consider them as the blue chip stock. And the good thing is that they're also stable in terms of in terms of price, and they're also stable in terms of their business. You can see that even the different economic cycle, you can see that they are still relevant, and they are still in operation. And investors also prefer this to be in their portfolio because of those that have a low tolerance, that those also like the retirees, those that are pensioners, they don't want to take this, those invest in those kind of what we call a good stock. They want to look at these blue chips that are stable and have reputation, and at the same time they are content their dividend payment. These are why they are classified as what as blue chip stocks. But for those that are penny stock, yes, penny stock will say that they give return, higher return at times, but the risk associated with the penny stock is very, very high. And that is why people that have a low tolerance for risk will prefer to go for those blue chip stock than buy into what into penny stock. But those that are risk takers like me, like you that are trader, perhaps use your chart to understand where they are going. You can play them just immediately for you to also look at what is happening there. If that also suffice, it tells you that you need to understand how to use your chart very well. That also goes a long way to support your decision. But for those that are don't understand the market, this kind of stocks also you have to trade with caution. Why do you do? Because they are very volatile. At the same time, when there's different type of different change in the economy can also affect the industry or the company itself. For that, you have to also be very careful when you are trading penny stock. And in here, the penny stock is classified as those stocks that are selling low below what? Below 5 naira. And because of the dangerous no speculative impact or even on their business model, you have to also be very careful because most times they can take you up, at the time they can also bring you down. That means in your investment portfolio, you need to diversify it so that you can have those blue chip stock, you can have those defensive stock, you can have those tactical stock. But if you are trading penny stock, I will tell you most times it's advised to trade with your technical analysis so that you won't jump. You don't just follow trend because most times don't just follow people are going at that time. That's the time they want to jump on you. You need to know exactly when the trend is building and go with the trend. And before trend finish, you have exit the market. But if you look at the trend alone, you know, go and buy at the wrong time. You buy at the time as you are entering, and that is what others are selling. You will complain that I bought high because you didn't follow what had happened before you jump in. That's why if you really want to trade penny stock, you must understand to do technical analysis so that you play what a bit safe in that position so that you get to what. And also, this is the time now we have studied other ones. It's time for you to also have a what we call portfolio diversification, and you need to also take from stuff from these different type of stuff and also sectors that were discussed earlier on Tuesday, different sectors, and also use what to build what a portfolio that can stand the test of time. No matter what is happening in the economy, the portfolio will be there because there are some investment windows where you cannot play anything called hedging. But you can use some stocks to play hedging at this market. Now we are seeing inflation hitting the roof in Nigeria. I'm not only that across the group, we need to also apply that wisdom when we are taking what our investment decision is very, very important. And also when you are investing, let's also look at these companies to know different what market capitalization. We have said it. Look at also their kind of their style in payment. And also look at their what how well they are run. So that you can able to build what a well balanced what portfolio. These are what we should do at this current time. Saying that we're looking ahead to see the outcome of what MPC meeting that is coming by next week. This type of stuff will guide you to know exactly what to do in your what in your portfolio. And with all this we have discussed since Monday, we know different kind of stuff we also should be looking at. As we speak now, breaking news that Bank of England has also raised their key interest rate just by 0.5. That means it didn't go up to like 75 basic points. That means go about 50 basic points. No, that is also okay. That means even who are forecasted that they're likely to do that, can also it has happened because of also they want to fight interest rate. That's why I said down here, if looking at the figure that were released as at our own inflation rate for the month of August was about 20.52. That's why they might be slightly kind of a jack up in interest the MPR by CBN. But I'm looking at this at the point of whether 25 or 50 basis point. They started with 150 the first time, and they do 100 at the second time. Now they might also be looking at either 25 or 50 depending on what they vote for. But another 100 will very for me. But don't forget that in US we saw that they have done 25 for 30 consecutive times. But I believe that now here we have seen them 150 at the first time. We're also seeing 100. But I believe that they should not go all that with 100. That would take us to 15% MPR. That would be too good for them. Not only for stock capital market. Every sector of the economy will be affected. I mean, if you really want to keep your economy in track, you need to also kind of know how you manage it, interest system. Because once also a further attack, that cost of funds will also increase. Or I think that today there is unemployment rate. If people are being laid off because cost of managing the business, despite the recent increase in savings, it is when you have money that you can save. If you are not earning, if what you earn is not cannot feed you, how much are you going to save? I think this is time for them to also balance this fair their decision on the interest rate hike as all eyes are what on the MPC meeting next week. This will also investors also think that you need to also start putting your portfolio where you can hedge against inflation, because as we are seeing also, rate is being hiked by CBN in the name of fighting no fighting inflation. Also, cost will increase. I know that cost is what's pushing our cost. It's not liquidity. Money, the cost also push inflation higher again. That means they continue to. That's why I said no. They should heed to what to the advice of what the World Bank. Look other way to address this issue of inflation. We know that yes, we are entering harvest season, but that is not enough, because we don't expect that to make much impact on the inflation, because farmers are not in the farm. So we are going to have excess produce that will also reduce price of commodity. If a commodity comes from the market, from the farm, and still have high demand, price will still demand up. And so I think this time for us to address some issue. Our security to also be addressed, kindly with what with decision all need to be done by all everybody involved in charge. I think this is the time for the sake of the economy and for the sake of our children, and also for protecting life and property. We need to do this at this time. Yes, we want to look at the chart. Look at the chart now. I can see today. I'm surprised that I call Bollinger Band up for a purpose. You can see Bollinger Band up here. If you check where the market had a breakout, here we are seeing a slow Bollinger attitude, kind of a compressed, before we saw a breakout. Also, we have a kind of expansion here before a contrast here. You can see it here. Before here, markets are trending from here or consolidate. Either before it start trending or the market consolidate from here. It took them more than almost 2 to 3 months. The market was consolidating before we saw another boom. After that, we saw another expansion in Bollinger Band before it now started coming down. Market is making lower lows. Well, we agree, but you also look at the point where it has come to a place to it comes to a kind of contract at this point. It broke out again, but still on the downside. But we're also seeing it's a trending mode. Also, we call it a consolidating mode now. But you can also see at this point that the Bolivar is also contracting at this point. Volume activities is also momentum is also low here. You can see it here, but market is also side trending. And at this point, what is going to happen is that either market will continue to break up out, up or down. And if market break the 49 mark down, we should know where market will spread before we can see a slowdown. But you can see that market has not, once it touch this strong support level at this point from down here, once it break it out, but that will also tell you where the market is going. For this one, as to speak, sorry, I jump there. Sorry that I didn't tell you the state of the market before going to the chart. But no, as we trade now, as we speak now, market is at doing 49,318, 318.72. Market is marginally down by we're seeing market has even rebounded up now. But let me hold on, let me confirm. But yes, I'm correct. But it's up now because when I started that 12 exactly, market was doing 49,318. I'll speak now, market has inched up a little, but money flow you can see it is going down, and also we're seeing the stochastic indicator of relative strength index is still at over sold region. It's a sign of up market. But as we speak now, we're also seeing that the market is having a bearish a bearish market or called a bearish breadth. No, that means a negative breadth as we speak. We're seeing that we have about 10 stocks losing, and just about 3 stocks in the world in the gainers chart. There's leading the loser chart now is Cornerstone Insurance, followed by Name Insurance. We're seeing Guinness, Owando, and ICO. These are the 5 top losers. Others in that categories are NGS Group. You can see Transcorp, the Fidelity. You can see FBN Holding and GC Code sit on the loser chart, and that's why the market is consolidating this morning. It opened slightly green the early hours before pulling back in this weekday. But as we speak now, the gainers are just 3 as at this hour. We're seeing Academic Press leading, followed by we're seeing UBA and Zenith Bank in that chart. You can see that in Zenith Bank, I will refer that you can see what we call momentum investing in Zenith Bank. Since they marked down, the price has continued to resist decline. You can see that it has crossed back to 20 naira again. That means Walmart eyes is on their third quarter. Third quarter will also determine where they are going. That's why also in the Corporate Master class, what to tell you, those stocks you can also use to hedge against inflation. But we're seeing that their stocks are showing us more resistant, also seeing momentum in some investing in some stocks, which I'm going to discuss also in that class. That's why you make yourself available. Just go there and go now and look at your itinerary for between now and the 1st of October. On that first day, Saturday, the weekend, that you can know what to do and be in the class. So that at the end of the class, you can take decision the next trading day, which is on Monday, on the third of on the 3rd of October. You need to also prepare yourself so that at the end of the day, the last quarter of the year, you take advantage to reduce your loss and also increase your gain if you are in a positive position. But if you are in loss position in the last quarter of the year, to kind of recover your losses and come to positive territory. And also, if you are in gain, you can also boost your gain. And this is the market situation as to speak. But we look at the chart to see what is happening in them. We are seeing profit taking activities. Yes, Guinness, we are seeing also profit taking activity in Guinness. We'll also look at the chart after it's going to go. But I won't stay much on Guinness, but I'll give you the chart for you to look at the chart. We are seeing the rebound in a kind of sluggish rebound in Zenith Bank, in UBA, and also in academic press. But we'll also look at what is happening in NGS. If that permits us to look at the chart of NGS, we know that the NGS sentiment, for this better sentiment is negative at this hour, but we need to look at how far will it go or affect the stock. We also look at fidelity. For GTB, for me, at the price it is now still good for those that are long-term investors and also pensioner, also that are looking for income investors, like I have discussed in this class, different categories of stock. These are the things also we have discussed. But let me go to chart now so that you can see what we're saying. As I explained for the index action, I've seen what is happening. This our T line is still there, and let's see what the market is doing now. I'll explain Bolivar Band to you so that to make it easier for you to understand why I put on the Bolivar Band and see. And also when you see Bolivar, your index action or price action resting on your word on the lower Bolivar Band, it's also a sign that the investor is underweight. You can see that the market has been is still trading below the T line. You can see that the T line is the blue one here, while the red one is the 20 days moving average. You can see that the market is below the 20 days moving average and at the same time below the T line. Now it is also a sign of weak market, but I believe that once it crosses the T line, rise up. You can see that money flow this morning also looking down at this hour. Also, but if you look at our momentum indicator, which is also the stochastic RSI, and see that market is at also oversold region, waiting for what a trigger. All this also what we expect that after the FPC meeting, going to the last quarter of the year, any sitting around the corner, we expect to see what a change, what in trend. If that happens, that will be what also investors should position for as we speak now. Quick one, because of our time, let's look at what is happening in NGS. Let's start with NGS to see how far that stock is going, looking at what is happening to that stock now. Look at NGS group. Let's see what is happening there. What the chart telling us about this company. If you look at the chart here, it's very, very obvious that it has been below the T line all this while. You can see it here once, and this is what I always tell you, that once you see the market going far from from the T line, and now if you're using with Bolivar Band, you can see that it has touched the upper Bolivar Band and also far from from the T line. And it gave a sign here. This is the right time for you to take, you have taken your profit before it start coming down to remain below the T line. Now, with what is happening, it's further extended down. But the good news is that now it's also resting at the lower Bolivar Band. And I told you earlier that the farther, on the downside is from the T line, then you are possible to rebound. But I'll tell you that this will have to wait for confirmation. The money flow is still looking down seriously on stock below 30. And we're seeing also that also enter the so the region again using what your stochastic oscillator. What to also keep our eyes on it. Once it comes down to as low as we see that 15 naira, that will be okay. 15 naira is okay for us to be thinking of entering the stock. So let's keep our eyes on the stock. Let's look at 1 hour chart for this stock also. On the 1 hour chart, we're trying to see a rebound. That's why you can see it here. After it has been on the lower Bolivar Band, you can see it's a good sign, and we're seeing the candles, but we need to wait until this candlestick will cover this one. That will not say bullish and government. Yet we need to also keep our finger crossed. But we're seeing volume coming at this hour, and we're seeing a little up move here, and also we're seeing try to turn at the oversold region of stochastic, which is also good. But let's keep our finger in that watch to see where it stabilizes before we can jump into the stock, that position. Yes, let's look at GT code that has been marked down yesterday, but let's look at the price. What the price doing now? Is there anything coming out of it? Let's look at it. Those I said earlier, for those that are okay on the 1 hour chart, we're seeing a momentum trying to look up, even on the money flow and the stochastic. We're trying to how to confirm for those that are income investor, you can be looking at it, but for traders, you need to confirm not to break out. But relying on resting on the low breaker band also is a sign, but you can see how far it has remained this level before finally break down. You need to confirm an uptrend. But those that are taking long-term position at this price, nothing stop you in buying to that stock. As we are seeing momentum coming up, improving gradually, let's also keep our eyes in that stock. But let's look at the day chart of GC code. GC code, we are seeing little, yes, I think that sign, you can see it here, we're still going around at 26, but also at the oversold region, you can see this is the point where it will turn, but we need to wait to confirm that before it can also. Once it crosses the key line, that is where I would say it's a good time to buy for traders. That is for that. Then also quickly look at what is happening in Zenith Bank. We are seeing kind of resistance in Zenith Bank. It shows you that no matter what is happening, either directors or not, you can see momentum investing, how it helps the stock to stabilize. That is what Zenith Bank is enjoying now. Tell you that these are kind of stock. You also look at performance. You can see it here. After I thought the lower program, I can see it as trying to, despite that the gain has not been much, as I have keeping an uptrend, which money flow has also give you a sign. You can see it's going between with the price action, and you can see that momentum indicator, the stochastic RSI is also looking up. For me, it's a good one, and the stock is trading around 2025 now, 2055, which is also good for the stock. You have to also keep your eye on Zenith Bank and what you need a definitely pull back until break down this strong support level before there will be any cost of worry. But at this point, I said no cause for alarm and no panic selling in this kind of stock. There are those that have taken down, trade dividend, hold your position. And that's why you need to also look at what T line. To speak now, it has crossed the T line. Yes, to whether you stay, it has come up now, trading at marginally on top of the T line. You have to keep once it crosses at the bond, hold your position. Even from here, you can still hold your position because there's already a sign there that the stock is heading up. Quick one, let's look at UBA. Let's look at UBA to see what UBA is doing now. UBA, what the Bank of Africa is doing. Look at UBA. UBA chart on UBA chart on a day. You can see that it's also we're seeing a sign trading above the T line. We're seeing signs that oversold region fine, but now the candlestick formation now is also that gone up. That's also the decline, which is good. But we need to watch at this to see how far it will go up here. But for those like UBA, I think there's no cause for alarm. UBA is around trading around 740, 735. Let's keep our finger on it and watch the stock. The momentum is still positive for UBA, and that's what's important about the price action. Let me look at 1 hour chart for UBA. What is it telling us? 1 hour chart is not smiling. You can see it here that it's also try to, as we speak now, it's pulling back, but I've not gone below the T line, the blue line there. Resting on it went to correct. You can see that money flow is also telling us the fund is also looking down. And also, if you look at your stochastic oscillator momentum, it's also that it has already at over bought region, looking at the 1 hour chart. But I believe for a day chart, there's still room for the stock to go up. Look at it here, it's just coming up from the. That's why I need to look at a different time frame to guide you in your investment decision. Finally, let's look at what is happening in NEM insurance. Cannot look at Guinness taking today. Let's look at NEM. NEM is profit taking. Is there any sign for where you can wait for it to jump into the stock? It's very, very key. You know exactly when to jump into the stock. You can see that you can see the power of here. You can see that at this point there was a kind of contraction in terms of momentum before you can see now it break out and it remained up. If you look at it, it tested the T line, it bounced back, tested the T line and remained up. And probably taken at this point for me, I'm not surprised, especially that it has been above the T line for a while. It has been trending up from as low as what 3 naira and still going up to this level. For me, it's a good one probably taken now, and it's not a crime. It's the part of the market that you want to take profit. Now that we are seeing it coming down on the day chart, let's wait to see where it stabilized for us to also start getting back again. For those that are not taking profit now, you are in order. There's nothing wrong with them. Take profit. As we speak, it's still trading on the road below the T line here on the 1 hour chart. As well, money flow. Also, you can see on the 1 hour chart a sign of rebounding here. At this oversold region too. Let's keep our finger crossed for the stock, but let's wait for stock to pull back first before we can jump into it. Finally, before let me just call out the Guinness chart. But you just look at the chart yourself and see what is happening there. That guide you what is happening in Guinness. But that was also go a long way for us to know in Guinness. You need to understand what is happening there. This is the chart of Guinness 1 hour chart. As we speak, below the T line. Look at it here. We're seeing momentum turning here because of the sell-off. We're seeing this hour 1 hour chart and there's already sell-off. You can see the volume here, and also you can see that money flow is down. Let's look at 1 hour day chart for you so that you can see for yourself. And also we're seeing money flow coming back. Yes, this is the chart for what for Guinness Nigeria. Yes, say thank you for your time. See you tomorrow. Like I say, feel free and go to the YouTube and watch as many and also make your comment. Also look forward to the site where we have posted about the market this morning. You know what is happening. Go there and also guide you to what your government is going to read up and feel free to ask questions. So see you tomorrow. For those that pay, thank you. For those that have to pay, you have the opportunity also to register between now and the 7 o'clock that month that 1st of October in the morning. 7 o'clock is the last time to register so that we're able to also put all together for the trade to start by what by 9. Yes, for those that take advantage of the early bird, we also say thank you because I was impressed with the number of people that also took advantage of that opportunity. For those that miss it, you still have opportunity to pay between now and that day. See you tomorrow. Enjoy the rest of your trading day.